6 financial headlines that moved the world. May 8th, 2025. The global financial system never sleeps, and on May 8th, it was buzzing with high-impact news. From global trade deals to crypto milestones, stock market highs, central bank warnings, and one of the biggest acquisitions in the crypto space, we're breaking down 6 financial stories you absolutely shouldn't miss. Whether you're an investor, trader, just curious about the future of money, this is your 5-minute AI-powered briefing. Let's dive in. 1 US-UK trade deal, a major de-escalation. The first story is a big one, and it's already shifting market sentiment. The United States and the United Kingdom have officially signed a new bilateral trade deal. Under the agreement, the US will reduce import duties on over 100,000 British-made vehicles per year. In return, the UK will grant improved market access to US exports, including beef, ethanol, and machinery. This deal matters for 2 reasons. First, it marks a step away from rising protectionism and trade wars that dominated recent years. Second, it reinforces the UK's post-Brexit ambition to sign powerful global deals on its own terms. Markets viewed the deal as a positive signal for trade liberalization, and it may encourage other countries, especially within the EU, to accelerate negotiations with both the US and UK. It's a win-win moment in a world of economic uncertainty. 2. DAX hits record high. Europe rallies. Let's shift to Europe, where the DAX, Germany's main stock index, just hit a record high. This bullish move was fueled in part by the US-UK trade deal, which raised hopes of improved global trade flows. But another factor is in play. Expectations that Germany could soon launch a fresh round of fiscal stimulus to combat slowing growth. That possibility has excited investors across the Eurozone. German industrials, automakers, and energy stocks all surged. This pushed the DAX to new highs, signaling confidence not just in Germany's resilience, but in European equities more broadly. Some analysts are now calling this a potential turning point for European markets, which have long lagged behind their US counterparts. 3. Bitcoin crosses $100,000. The crypto comeback. Asterisk. In crypto, a major psychological and technical milestone has been reached. Bitcoin has officially crossed the $100,000 mark, shattering its previous all-time highs and reigniting global interest in digital assets. The rally is driven by multiple forces, the most recent Bitcoin halving, which cut supply in half, rising institutional demand through ETFs and structured products, growing acceptance of crypto by governments and banks. But this isn't just retail speculation. Major hedge funds, asset managers, and even pension funds are now holding crypto as part of diversified portfolios. Some analysts say we're witnessing the transition of Bitcoin from digital gold to a mainstream financial asset. The question now is, can it hold above $100,000, or is another correction on the horizon? Either way, Bitcoin is back at the center of financial discourse. 4. The Fed holds rates, warns of stagflation, a hawkish pause. Now over to the U.S. Federal Reserve. This week, the Fed decided to hold interest rates steady, maintaining its cautious stance on inflation. But the tone of the announcement triggered concern. The central bank explicitly warned that stagflation is becoming a real risk. That means inflation is staying high, while economic growth is stalling. It's one of the most difficult combinations for any central bank to manage. By holding rates where they are, the Fed is signaling it won't ease prematurely, even as pressure builds from businesses and markets for rate cuts. This move is making investors nervous. Bond yields are holding firm. Equity markets are now trying to reassess valuations in a higher-for-longer interest rate environment. The message from the Fed: we're watching closely, but we're not blinking. 5. EU threatens $95 billion in new tariffs. Trade War 2.0, Europe is preparing for a counterstrike. In response to new tariffs imposed by the US, the European Union is considering levying up to €95 billion in new duties on American exports. Targets include aviation, automobiles, and alcohol, sectors that hold significant weight in US export revenue. European officials argue that this is a necessary step to restore balance and prevent unilateral trade measures from going unchecked, but it's a risky move. The US-EU economic relationship is already strained, and more tariffs could escalate tensions across industries and supply chains. For investors and businesses, this means greater uncertainty, and a reminder that politics and economics remain deeply intertwined. 6. Coinbase buys Deribit. Crypto M&A gets serious. Our final story is a big one for the crypto industry. Coinbase has acquired Deribit, the world's leading crypto derivatives exchange, for a staggering $3 billion. This acquisition gives Coinbase a dominant position not only in spot trading, but also in the rapidly growing derivatives market, including options and futures on Bitcoin and Ethereum. It's a strategic move aimed at serving institutional investors who now demand more sophisticated crypto exposure tools. With this acquisition, Coinbase is no longer just a trading platform. It's positioning itself as the JP Morgan of crypto. This could accelerate regulatory acceptance, drive volume, and reshape the entire crypto market structure. OUTRO. Call to action. So there you have it. 6 financial headlines that are shaping markets, trade, crypto, and policy, all in real time. Global trade is shifting. Bitcoin is booming. Central banks are sending serious signals. If you want more sharp, AI-powered financial analysis like this, delivered fast and clear, don't forget to like, comment, and subscribe. We've got more videos coming, and you don't want to miss what is next. This is FinAriNews.